Hey traders, Raghi here. This is your daily 1 hour day trading in the morning recap with me, Raghi Horner, for September 16. So every morning between 9:30 and about 10:30 in the Sector Secrets Mastery, I focus on 60 minutes of day trading, finding setups, getting the follow through, and then I share every day what we alerted in the Mastery for setup. So today we had two trades, and one was a loss and one was a winner, and I'm going to walk you through each one of them here this morning. So first of all, I don't put on a single day trade until after 9:35. It makes sense to wait until 9:35 as the volume comes in, as the spreads normalize, as oftentimes those larger candles on the open print. It's good to get that out of the way. By 9:40-ish, I'll start to see sector strength, support, resistance, which symbols are above the line in the sand, which is the previous session cash close. And I can get a better idea of potential follow through. This morning, the first trade we saw at 9:47 was a Darvis-based buy. So here is the Darvis level right here. And we look at the lower eighth of the range. And you can see here, we were looking for a 2370 entry, which is right at this Darvis support, to simply get a bounce up to about 265. And we had a neutral structure, oversold market. And really what happened here is the NASDAQ continued to sink. Semiconductors, including NVIDIA, continue to sink. And it just drug Taiwan Semi lower. Now let's talk about what we don't do here. Number one, we don't do the dreaded add. Okay, we have a saying, losers add to losers. We don't add to a position. When we're wrong, we know the percentage or the price level from which we're wrong at. We respect the stop loss and we move on, right? One of the worst habits, one of the most difficult habits to break is this notion that if we just keep adding to the position, eventually it will bounce. And as you're adding, you're lowering the cost basis. But remember, nothing has to bounce. And as a trader uses the absolutely, for me, I'm going to talk about the way that I trade and the way that I teach. Adding increases the risk because it increases the dollar or the percentage of the account that is at risk, right? Now, scaling in is very different than adding because scaling in means each and every trigger was known beforehand and everyone can choose which triggers they want to enter at, versus usually an add is never planned. It's usually always a reaction to losing. Can you imagine if we continued to add as this thing sunk? And here's a really big point. This loss was 15% of premium paid. So I'm going to show you what that in dollars meant. I love talking about losses, and here's why. Traders who love talking about losses know that in order to grow, you have to accept the losses, right? Take your stop and move on. And most traders try to fight all of that. Taiwan Semi cost I entered at two levels. I had a very small amount at 440. I put in a bid, and the bulk of my position was here at 425. Both of them were losses, by the way. Here's how those losses ended up happening. 425 times 85% means that this particular position has lost 15% of premium paid. I give it a nickel to account for the spread, and that's my stop loss. Same thing here, 440, 15% loss based on premium paid. I give it a nickel. That's where I closed it out. So if you're wondering, okay, Rog, what was that loss per contract? Really simple. $4.25 minus $3.56. And that is 69 cents or $69 per contract. Here, $4.40 minus $3.69. That was 71 cents per contract or $71 per contract. Okay, not fun, but really good losses. Or really good losers, right? We always talk about, good loser, be a good loser. Well, in trading, it's really true. It's more than sportsmanship. It's respecting your money. And the idea that adding to this would have somehow spared it. Well, today you can see it bounced a little bit, and this is what I need to warn everybody of. This is where the pig in the head says, see, if we kept adding, we might have made money. You got to fight that. We never even made it back to the original entry zone. This is a terrible habit. Don't start it. You want to know the surest way to blow up your account? Use max debit, add to losses, right? And try to pick tops and bottoms. All traders who lose money consistently or blow up an account typically do one or two of all three of those things, if not three out of those three things. So I love talking about losses, and the only folks that don't like talking about losses are people who lose a lot, and I just don't, right? My win rate's usually about 62 to 68%, which means I'm going to lose about every 3 to 4 trades out of every 10. So I'll lose 3 to 4 trades out of every 10. I can live with that. Yeah. And so I want to be really transparent about these. So that's my loss. Okay. The second trade this morning was Procter & Gamble. So we put on Taiwan Semi, and then 5 minutes later, we put on the Procter & Gamble trade. So take a look at this one. Now, what's really interesting about juxtaposing these two entries is that Taiwan Semi is a tech play in semiconductors. Procter & Gamble made a lot of sense because 3 out of 4 of the indices were pretty weak. And typically, staples are a defensive play. They're a play that when the equity markets are weak, traders think, well, we'll always need toilet paper. That's kind of the thinking behind what goes on inside the XLP Consumer Staples ETF. Procter & Gamble is one of the biggest holdings. So you can see here, we bought the September 19 155 call, and we had the 157 or 156.92. There was only 8 cents between these. So you can see I put in the or here in the setup. So again, letting traders know all the levels beforehand. The other scaling was going to be conservative at the 156.83. So we set this up at 9:52, right around here. We made a low, as you can see, right here at 10:05 at 156.90. That means both the aggro and the moderate were triggered. So both of them were triggered. Let's go back to crunching some numbers. What is my potential loss on this trade? I paid $2.70 and $2.65 on both these entries. And I don't think I got particularly good fills. Sometimes I'm not, sometimes I am. I wasn't particularly, so I basically peppered the bid in an effort to try to get some decent fills. You'll notice though, we did not get down to 156.83. So as we were trading in this zone, I'm moving some size. So I put them in at different bids. So I'm not putting in all my contracts at one size. That's basically the reason for the 5-cent difference. So I paid $2.70, which with a 15% stop loss brings me to a stop loss of 224. 265 brings me to a stop loss of 220. Well, that was really a moot point here in Procter & Gamble because having gotten in at this level, Procter & Gamble with that stop loss of 15% never got close to it. In fact, this thing never looked back. Now imagine had I been continuing to add to Taiwan Semi with target fixation and didn't see the great opportunity here in Procter & Gamble. This was actually a mean reversion entry. So when I say wave entry, that means we have an uptrend and we're reverting back to these 3 lines here. That's the wave. That's my mean reversion. And that's what triggered this trade. Now, as this thing went higher, the first target you can see is in the alert. You're not waiting on me to tell you, hey, I'm going to get out now. Everybody knows at 157.60 we're going to scale out. So the first scale out was 305. Then the second scale out, we kept discussing this trade in the notes. By the way, the KRE trade never triggered. So the next level was 158.15, and that was $3.50 per contract. And then the last exit is getting out at basically 10 minutes before the close, and that was basically in here. So you can see we pretty much got out a little bit higher, but I'll talk about the 2 scale outs first. Yeah, we had a little bit more profit on that T3. T2 was 350, T1 was 305, all right? And I'm just gonna talk about the 2 targets here because let's say you only had 4 contracts or 2 contracts as opposed to I had many more, so I could go to that T3. But let's talk about what you would do if you were a short-funded trader, right? $270 and $265 per contract. So let me use the higher of the 2 numbers. Even though I scaled that at a higher level than 350, let's say all you could take were the 2 entries. That's 80 cents per contract, right? And then obviously 85 cents per contract from top to bottom. Now, did that absorb not only the loss in Taiwan Semi? Yes, because remember, we scaled out twice. We were able to scale out at 305 as well. So again, 305 times 270. So when you start to add up the overall win in this trade, it was actually just over $1.20 for me from top to bottom. If I kept adding to Taiwan Semi and then I had this nice winner in Procter & Gamble, I never would have been positive on the day. So Taiwan Semi cost me money, but because we kept that tight stop and adhered to it, right? Then when Procter & Gamble worked very nicely, we not only took that loss back today, but actually ended up as a winner overall for the day. Now, think also of dollars being allocated. I'm a big fan of a fixed bet strategy. So that means that I'm going to allocate the same number of dollars maximum to both these trades. So I'm not going to have mismatched size where, for example, I might have $5,000 worth of options for Taiwan Semi and only $2,000 for a Procter & Gamble. I do not adjust my position sizing. It's a fixed bet approach with a scaling into a maximum level. And that's how we did this morning in the Sector Secrets Mastery with all the numbers broken down for today's trading. All right, so I hope that helps. I'm glad we got to cover a loss. You saw how I handled them. That's how you take a loss. You acknowledge the risk, you realize the trade is not going in your favor, and you cut it so you can open up the bandwidth of both your mind and your capital and move on and find, hopefully, other winners.